What's going on, traders? So this will be the first lesson. This will be at a beginner's level, just to break down how I trade, the strategy I use, and understanding the market. So let's start off by understanding candle formations. So over here, these candles start from strongest to weakest. So as you can see here, we have a full strong candle. This is a bullish scenario, and we start declining as we go down, the weaker the candles, meaning when you get candles like this one over here, the first one, as a signal bar, this is a great candle to enter. This one as well. Third one, when we get to the fourth one and it becomes almost doji-like where we have wicks at both sides, depending on the setup, if it is a very strong setup where you're confident, you can definitely take this. Once we get to the last two, this is where it gets kind of tricky and you have to avoid taking the trade because on this candle here, you can see we have a strong wick up, which is telling you that bulls tried pushing the price up and bears drove it down. We have almost half of this candle that was taken out. And the last one here, this is a very weak candle. Same scenario here, but the bears even got it more down, meaning the bears took control of this candle, right? And sellers are stepping in. And this will be the opposite in a bearish scenario, where when you get a full bar like this one, this is showing bearish strength, and the bears are in charge, as well as this one. Once you get to the last three, this is where it gets a little tricky. Whenever you see a doji, depending on the market setup, you can take it if it's a very strong, confident setup. But once you get these two, similar as up here, the bulls are in charge and they are buying out these bears, right? So when you see these last two as a signal bar, these are the candles that you want to avoid taking. All right. So let's get into this lesson. So we're going to start off by marking the pre-market high, right? Which is any price after 12 a.m. So over here, this was yesterday's price action. We're gonna look anything after 12 a.m. Over here, we have 130. This is where the market started trending. This is the highest point. So let's just make it the color green for educational purposes, and we can label it high of day. It's important to mark these because usually when the market opens and we come near these levels, there's usually a really good chance that we can either reject down it, right? So it becomes a resistant, meaning a lot of smart buyers and institutions will sell at these levels. If you guys ever heard buy low, sell high. So once you see market come close to these levels, this is an area where you just have to be extra cautious because there is a chance that we might sell off. In a situation where we break above this level and we continue pushing above it and it becomes support, then we can look to draw a wider uptrend, right? Now we're also going to do the same for the bottom part of this range, right? So we're going to look for the pre-market low, which was around this area. So right now I have this around 10 a.m. So we're going to look for the pre-market low. So we'll draw it around here, around 8 a.m. And this will be the low of day. And I'll just put this for educational purposes so you guys can understand what these levels are. This is the low of day, the LOD, and the high of day. And as you guys see, as prices came down to this level, we held, we had a double bottom, right? So the bulls actually ended up buying this price. They bought the low and prices reversed up, right? So as price is going, I'll explain later what's happening here. So the first example I'm going to do is we're going to do a bearish example, right? So how I would take a trade when I'm shorting the market, meaning I'm expecting the market to go down and reverse under, right? So initially what I like to do is I like to draw a trend line near the open or just the same way I drew the high of day. I'll look to draw a trend line, right? Because we are trading today's price action. So I'll find the highest point or the highest pivot, and I will draw a trend line aligning with the market direction. The more confirmation touches we get, the better. Let me zoom this in, meaning when I'm drawing from the highest point, I want to get as many confirmation touches and I want to draw it tight. So as you guys can see here, I am drawing it according to the direction of the market. It's almost, you can look at it as like a channel, or if you want me to give you another analogy, it's like a highway where we're drawing it according to the direction of the candlesticks. So I'm going to draw it like this. I'm just going to copy this and put it on the other side. So as you can see, I started from the top and I'm aligning it where the candles ended up um, touching, right? We have multiple touches here. So this is a nice clean downtrend working lower. Now, according to Priceline rules, once we break above this trend line, right, this green line here, we expect prices to retest the low. So the low is this area right here, and we broke above the trend line. So we expect prices to reverse down and make a new low, right, according to Priceline rules. Once we break this trend line and we make a new low, and let me label it for you guys. Once we break and we make a new low, we are going to pause looking to take a short. Why? Well, because the trend played out, right? We ended up breaking the trend line. Bears tried reversing the price to make a new low, a new extreme, and we did do that. So now we're just going to wait. Now, and I forgot to mention, what I am watching is what I am trading is I am trading ES, right? So the tick is going to be ES, right? And we are looking at the 2000 tick chart. Now, it's very similar to the 1 minute chart, and it's just something that I use and it works great with my strategy. So we are looking at ES and we are going to open the 2000 tick chart. It's the same way that you look up the time frames, right? So instead of 1 minute, you go to tick and we're going to look up the 2000 tick chart. And the only indicator that I use is the EMA. So let me write that out for you guys. This is the only indicator that I use. Depending on the platform that you're using, you can just go to indicators and find it. EMA stands for the exponential moving average. And we are going to set that period to 21, right? So we use the 21 EMA as an indicator. This blue line here is the 21 EMA and the period that we're going to set it on is 21, right? Once you have that set, you can choose any color. Now, the way I use the EMA is I use it when I'm looking to enter a trade, and it's our best friend in the essence of once we get multiple rejections at the EMA, this is an area where we know that bears are holding price under, and this is where we will enter, right? Um, it's almost like a guide for you. So let's say, for instance, after we broke this trend line and we expect prices to make a new low, we ended up full blown reversing, going above the EMA. Then I would wait patiently and wait for the correction to play out until we're back under the EMA. Okay. So in this situation, we had a trend line working lower, we broke it, and we made a new low. So for the time being, we are going to wait for price to correct. I call it area of development. So because we broke, we made a new low, we're just going to wait and see what the market is going to do. Once you see price starting to get stacked, right, and EMA is in the middle of these candles, this is an area where you do not trade and you just wait for prices to choose a direction. So as you can see, we broke lower, we corrected, we made a new low, and now the market is just trending in the middle of the EMA. You could also look at it as a consolidation, and I'll just show you guys for reference how it looks, right? Prices are just stacked in the middle of the EMA. So now we are going to wait for price to either push up or down. A great way to know what the market is doing is looking at the way the EMA is pointing. So here the EMA is flat, it's in the middle of these bars, so this is a no trade zone. But once you see price push above EMA and EMA is pushing up, you can start considering drawing a new uptrend, right? But guys, you also have to remember we traded down today, right? So since the pre-market, we did trade down. So my bias is going to remain slightly bearish, and I want to see what's going to happen here.